It's May 28th, 2014. Current time is 10:30 GMT. Jay Marsley here with the Daily Forex Trading Outlook. It looks like this is we're coming to a thin period, one where we have holidays in Europe tomorrow, month end on Friday, and then we look ahead to key events next week, starting with Eurozone flash CPI on Monday, and then the ECB meeting on Thursday. Also, U.S. jobs on Friday. So we got a key week coming up, but in the interim, market seems a little confused. Bond yields continue to fall. Even the U.S. 10 years down to 2.50%, despite some good data yesterday. That may be limiting the dollar's upside, but whatever the case, we're in that kind of a holding period, waiting for next week. Now, one thing about sterling, which has been the underperformer today, it's come under some pressure. Some say it's due to month-end flows. Perhaps due to interest rate repatriations. I remember there was a time the Bundesbank used to convert sterling interest into euros at month end. Maybe it's happening a day earlier because of the holiday tomorrow. Whatever the case, sterling has come under some pressure, and there 167.29 is my key level. If it's broken, then you confirm to shift into a downtrend. Now, as far as the euro goes, we look right here. 20-day has moved through the 50 and 100 period moving averages, starting to show some momentum, even though we've been flat for several days here, as you can see right here. But that is a sign, at least, if we can take out that 136.12 level, which we'll discuss in a second. Now, I'm playing with the drawing tool here, so just bear with me as I switch charts. I'm going to go to the 1 hour chart. First, I'm going to go to the 5-minute chart. Look at this. This looks like a huge day today. Look at this volatility. This is a 21 pip range. That just goes to show you how thin this market really is. And a 21 pip range is just, it's very unacceptable. But if it's a hand you dealt, you just got to be prepared to trade it or trade some cross or trade something else. Now, here's something that if you look at the 1 hour, for example, and I will get my little drawing tool, right here is 136.38. That is your resistance right now, although the key levels are really 136.68 to 88. On the downside, we have this 136.12 level. Now, why is that important? No reason at all. It's not a technical level. It's we call it an invisible hand. We've seen this happen in the euro before, where some bid shows up and the market can't take it out and give support. We've seen it happen time and again, even on the way down. It could be due to reserve management, because if you know the Bank of China, for example, or some other flow. Also, there's talk of 136 barriers being defended. So watch that level, 136 figure to 12. Eventually, if this, as long as we don't go back above the 200-day moving average and also 136.50, eventually that's the risk on the downside. Although we may have to wait until late Friday when market starts positioning for the following week after month-end flows go in. So really, next couple of days are going to be thin. No change to the targets. Targets are 135.59 to 62, and again the key level here is 134.75 right here. So that's what it will be. But if in the interim, just I guess you trade the range. That's all you can think about. I said markets are getting thin. Maybe we have to wait for U.S. interest rates eventually to pick up. It might be till later in the year when they start looking ahead to a rate hike in 2015. It's a long time to wait. So in the interim, take what the market will give. Trade the currency that's most active. In the case of Eurodollar, right now it's just consolidating. You got the invisible hand at 136.12 and 136.38. That range is too tight to last so long. We have to get above 136.50 to at least put that 136.68 to 88 level in play. On the downside, you have to get to 136 with the room of barriers to put that 135.60 in play again. In the interim, the market's just going to fluctuate. Just beware where you're in tight ranges. Small moves, as I showed you on the 5-minute chart, can seem exaggerated. So just beware. We're in a 21 pip range today. An 8-point move will feel like 80 pips. Now, one thing here, if you look down at the bottom here, I talk about articles I've written. There's one here called Adapt or Die. If you want to survive in these current markets, you should read this article. I'm going to have a follow-up to it coming up this week also, as we look to trade in these low volatility markets. So this link here is embedded. All you have to do is click on it, and you'll see the article. Good luck, good trading, and we'll touch base tomorrow.